Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick and Katie Greifeld counting you down to the closing bell and are here to help take us beyond the bell. It's a global simulcast with Carol Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as streaming on YouTube. Carol, what do you got?
What do I got? What a different tone right now. And I do wonder how the earnings that are coming after the closing bell can once again impact sentiment. I do feel like we are driven from data point to data point, from earnings release to earnings release. We'll see what Tesla and IBM and all the others, what they do to the tone here.
The focus is certainly on earnings, but we still got some good macro comments from one of our guests earlier in our program, Jimmy Lee, the founder and CEO of the Wealth Consulting Group, saying that, hey, he thinks that we could avoid a recession. And he does think that the Fed is going to pause in the first half of this year.
Yeah.
He thinks it'll be March when the Fed pauses.
What do you guys make it, though, too, of some of the industrial earnings that we got, which were pretty bad, and the reaction to them were bad, whether you're talking about 3M or some of the railroads. And, of course, I think later today
Not good.
we get a couple.
Not good.
Yeah.
That's the real economy, right? Moving things around, telling us whether there's demand. I think it tells us a lot.
I'll be honest, I'm a little surprised to see the change in tone in the market. I couldn't point to one single thing that actually move stocks higher. I mean, I thought this was going to be a day where the S&P 500 finished down 1.5%.
I think a lot of it was Microsoft. Of course, Microsoft did finish 1% lower, but I don't know, for a while, it looked like if you laid Microsoft over the NASDAQ 100, the intraday movement, that they seemed to match up almost perfectly. Yeah,
there was certainly a flip-flop there, whether it was just valuation call or not. Microsoft down about 6%, 0.6% here on the day. Earnings after the bell, Tesla, IBM, Packaging Corp, ServiceNow, Lam Research, and Las Vegas Sands, to name a few. Dow Jones Industrial Average going to finish the day basically unchanged. We're going to call it down less than a point. The S&P 500 down about 1 point itself. Call that unchanged. The NASDAQ Composite down 22 points or 0.2%, and the Russell 2000, Carol, right now is going to finish the day higher by 0.2%.
Go figure about that. Looking at the S&P 500, 287 names are higher in the session, 215 lower, and Katie, we've got one unchanged.
And we look at the industry groups, it's a pretty even split. Once again, you have telecom up top, the banks, too, having a pretty good day. You look at the bottom, the transportation industry group, utilities, media, and entertainment, all leading the way to the downside, Carol.
All right, let's get to some of the gainers in today's session as we await those earnings. ASML Holding, this one was up about 1.7% by the close, even though the CEO had some warnings, some concerns about some of the tensions between the U.S. and China, about chip controls and what it could mean. But ASML did come out forecast better than expected first quarter sales due to strong demand for its advanced chip making machines. So that is an interesting trade. And remember, we've got Lam Research also playing in the chip sector. That will come out after the close. Right now we have CSX. Do we want to go to it?
Yeah, well, we'll hit it. You mentioned it. CSX 4Q EPS coming in 49 cents versus a 47 cents estimate on average here. The revenue, $3.73 billion here. And that looks like that's going to be pretty much on the nose of what the street was expecting. Operating income, 1.46, again, there on the nose.
Yeah, I'm looking at in details in the company's press release for any commentary about the economy. Remember, we got some railroads underperforming today as a result of other companies that reported, like Norfolk Southern, for example. Yeah, shares finished the day down significantly lower as a result. This company coming out, CSX, saying that the team made great performance and progress this quarter, delivering strong earnings as our network performance continued to gain momentum. With the right resources now coming into place, we can turn our full attention to the opportunities ahead in 2023 and beyond. This company's CEO saying that they're going to win share from trucks and drive profitable growth over the long term.
Not too much movement in the shares, though, after hours. I see unchanged. Maybe that's an error on my screen. But you look at how shares have performed over the past year, only down about 8%, so outperforming the S&P 500.
Well, but it's interesting, and we'll look for some more commentary as these numbers come out. And, from all of the companies, what they have to say about what kind of transparency they have, what kind of outlook, visibility they've got, Romaine.
Well, but going back to Norfolk Southern, because I thought it was interesting, even though those shares got hammered today, the commentary actually wasn't that bad. And a lot of sell-side analysts really came out and pointed that, saying that the company really wasn't saying end demand, meaning the consumer was really the issue there. There was, I guess, more incremental issues that they have to deal with. But they seem to think that these companies are going to be a little cautious, of course, with that guidance. That doesn't necessarily mean that the sky is falling. It's just that maybe they don't want to go too far out on a limb and say everything's going to be great.
It kind of brings us back to our conversation that we had with Mario Cordero over at the Port of Long Beach earlier. I know you guys spoke to him as well. He said 0 ships are out there waiting to get in. it's a return to normalcy. He did say the economy is slowing, and that's what the Fed wants, but he was short of actually calling a recession. And he was like, things are almost back to normal.
Yeah, and I love Mario, but I do wonder that when you see that drop in imports and import traffic, whether we should be a little more concerned about.
He wasn't alarmed. He wasn't alarmed.
But he did talk about that containers were being canceled because of the import traffic coming down. So I do think that's interesting. You know, we talked about Capital One Financial, which was out after the close. It gained in today's session, but it did because the company is putting aside more for provisions. And I thought that was interesting.
Yeah, I thought the market reaction to that, I was like, what? But I guess it makes sense, right?
But they're being careful, right? Ahead of it.
Careful. But maybe that's what gets rewarded. If you're careful now, and then if we do get through, and maybe we don't see this big economic downturn, then of course that means you have a lot of upside, maybe a couple quarters.
Like cutting jobs, right? Maybe, and that's why some companies are being rewarded.
Yeah, it's
at
tough,
this point.
but sometimes that's what you have to do.
Exactly.
And what about the commentary? And but when you talk about the commentary of Satya Nadella, who addressed just that, this idea that whatever the new normal is for, at least for Microsoft and its business, isn't going to be like the old normal, and they have to operate at a slightly leaner level than what they were doing before.
I thought it was notable that his commentary seemed to push other companies down more so than Microsoft today.
Right, because they're not Microsoft.
Exactly. Shares like Alphabet. You know, Alphabet reports next week, but what? I mean, shares ended up finishing down around 2% today.
Microsoft is a pretty well-diversified company. I mean, I know a lot of people don't look at it like that.
And still
but put that up
growing.
against Alphabet and show me the diversification in Alphabet.
Still growing. CSX, by the way, sees 2023 capex about $2.3 billion. The estimate was 2.08. So they're spending.
I got some more earnings for you.
Let's do it.
Let's Las Vegas Sands as we wait for Tesla to cross the wire. Las Vegas Sands crossing the wire right now. Their net revenue pretty much coming in slightly below estimates, $1.12 billion, versus an estimate on average of $1.18 billion is what the street was looking for. They did post a loss on an adjusted basis, 22 cents a share here. Not really seeing any guidance here, but the share is only down about 1% here in after-hours trading.
Yeah, remember, this is a company heavily reliant on Asia and businesses there, so travel restrictions.
Isn't Asia supposed to be doing? I guess we're going to find out after they come back for the Lunar New Year.
Well, the company's chairman and CEO said, well, travel restrictions and reduced visitation continue to impact our financial performance during the quarter. We remain confident in a robust recovery in travel and tourism spending across our markets and deeply enthusiastic about the opportunity to welcome more guests back to our properties throughout 2023 and the years ahead. So those travel restrictions over the last couple of years really hurting the company.
All right, back to the chip sector we go. Lam Research just crossing the Bloomberg terminal. Second quarter adjusted EPS. This is a beat, $10.71. That compares with the estimate of $10 even. Revenue, let's go to the top line, $5.28 billion. That too is a beat. $5.09 billion was the estimate. Right now, just early trades, Katie, we're just seeing the stock up about 0.1% here.
Yeah, not too much movement. It feels like investors are really parsing through this. And what gets rewarded in this earnings season? Not so sure. Haven't really seen a good narrative other than those cost-cutting measures that we were just talking about.
Yeah, and it's interesting to look at Lam Research's results, of course, against the backdrop. I think you mentioned it earlier with ASML, of course, out of the Netherlands. And the idea here that for these chip equipment makers, that maybe they're not necessarily seeing the sky is falling. And like a lot of them are sort of blunted to a certain extent by these sort of cyclical natures of the end product.
To that point, Tim Archer, the president and CEO of Lam, weighing in, saying that given the decline in wafer fab equipment spending expected in calendar year 2023, we are taking proactive steps to lower our cost structure and drive efficiencies across our global footprint while preserving critical R&D. Lam is focused on accelerating strategic priorities to capitalize on the semiconductor industry's long-term growth prospects.
This is all about margin protection, I feel like. You know, doing what you need to, whether it's cut workers, unfortunately, or cut costs, Katie. Like, companies are coming out and taking the steps, cutting back on real estate, doing lots of different things to maintain their cost structure.
Tesla earnings crossing the wire right now. Let's get right to it, folks. 4Q adjusted EPS, $1.19. The street on average was looking for $1.12. That's the main headline crossing the wire right now on Tesla. Going to take a little bit of time, of course, to dig through some of these numbers, guys. As we know, this is always sort of a complicated report here, but at least looks like on the headline figure, adjusted EPS beating slightly by roughly about, looks about 7 cents a share here on the 4Q adjusted EPS.
And it looks like investors are still deciding how to feel again as we await sort of the drip of information. We see that fourth quarter free cash flow was $1.42 billion. The estimate there was for $3.13 billion. So a bit of a miss there as we continue to watch these numbers roll in.
The big thing I'm really interested in seeing is just how much they were able to stoke demand by cutting prices, but more importantly, how much, if at all, that ate into profitability.
Yeah, and that was toward the end of the quarter. So, I'm more interested on the outlook, given that, Tesla has lowered prices across its lineup in different areas of the world. Shares down about 0.4%, 0.8%. The hard part about Tesla earnings, of course, is that the slide deck is 40 pages, and you have to go through that to get the numbers.
Well, some of the key numbers coming out, the great folks over at Bloomberg already got it down. The long-term 50% compound annual growth rate that Elon Musk has been talking about, they're sticking to it and expecting that they will remain ahead of that production target, 50% on that number, 1.8 million cars, Carol.
All right, I want to get to IBM because it's crossing, and here's the big red headline: to eliminate about 3,900 jobs. This is coming from the CFO talking about this in a interview. So its current workforce is about 260,000, a little bit of perspective, and also talks about the currency impact. 2023 constant currency revenue growth at mid-single digits. This is important, the currency impact. Analysts wanted to see how it was hurting this company or helping.
Yeah, the fact that the dollar has been weakening, it seems like shareholders seem to like, again, those cost-cutting measures that we've been talking about, those job cuts. Shares only up about 0.9% or so, but bouncing around.
Yeah, bouncing around here. And I think when we get to this idea here of sort of how IBM has really tried to transform that business, and the idea that they at least see themselves as someone insulated from some of those outside pressures, the idea here of the cycle that they're in right now is a little bit divorced from, I guess, the on-the-ground economic conditions. Maybe that benefits them. Interesting to see what they say on the call.
Well, to that end, Romaine, the company's CEO, Arvind Krishna, IBM chairman and CEO, saying that looking ahead to 2023, he expects full-year revenue growth consistent with our mid-single-digit model.
All right, let's get back to the star of the show, and that is Tesla. Adjusted EPS looks like a beat. Cash flow metrics, free cash flow looks like it is a miss. The company's sticking by that 50% growth rate target and also saying that they have sufficient liquidity to fund their product roadmap. Joining us right now is Ed Ludlow, co-host of Bloomberg Technology. Ed, what jumped out at you in these earnings?
Yeah, I go straight to gross margin at 25.6% in the quarter because I know that's what the street were looking for. The forecast was for 25%, and they've got slightly above expectations on that, right? The reason we're looking there is because of the impact of price cuts, not just here in North America, but in China and the European market as well. Also, the impact of foreign currency, really interesting. On a top-line perspective, negative FX impact of $1.4 billion, which seems like a lot, but when you go to the bottom line, that negative FX impact comes in the form of $300 million. So there's some mitigation. The narrative here is really interesting. Very high up in this shareholder deck, Tesla are talking about a difficult and challenging macro environment. The focus, Tesla says right now, is cutting costs in different part of the business. How that translates, according to the company, is they are seeing profit growth in other parts of the business as well. But, an interesting mix. Investors kind of seem like they're taking time to make their mind up, right, guys? We're bouncing around between a modest gain to a few tenths of a percent lower. We're now flat, all on the earnings call. How exciting.
And Ed, give me just 1 minute because we are getting some other earnings as well. This from ServiceNow. The fourth quarter adjusted EPS was $2.28. The estimate there was for $2.02, so that's a beat. You also have fourth quarter adjusted revenue coming in just over $2 billion, a hair above the estimate for just about $2 billion flat. Karen.
Yeah, that's stock down about 6.5% as we speak. Back to Tesla we go. Another headline: to remain ahead of its long-term 50% compound annual growth rate with about 1.8 million cars in 2023. They also talk about the Cybertruck. Ed, in terms of growth for this company, are we getting that in this release?
Yeah, I mean, the commitment to the 50% annual average growth rate is important because after we had those fourth quarter deliveries that came in below expectations, despite being another record quarter, a lot of analysts started to question whether over a multiple year horizon, 50% average annual growth was really possible. Well, Tesla's reiterated it in writing in this earnings statement. I'm just going to read you a little bit of what I was talking about earlier, which is that they are prepared for short-term uncertainty, which makes you think that this might be around around the demand picture that we're seeing, particularly in China. They're also talking about their commitment to autonomy and energy solutions long term. And I know a lot of folks are sending me questions on Twitter for some of our guests later this evening in Bloomberg Technology. Can you ask them about the energy business and when that becomes a bit more of a star? Interesting if that's the case on the call. But as I said earlier, higher up in this earnings deck, shareholder deck, they talk about accelerating our cost reduction roadmap and driving towards higher production rates. Really interesting. They're talking about growing their footprint globally for production, even when there's questions about demand.
Ed, I know you're going to be all over it in just about an hour. That is Bloomberg Technology co-host Ed Ludlow. Joining us now for more insight on IBM, let's talk to Bloomberg Intelligence Chief Technology Analyst Anurag Rana. And Anurag, it looks like a beat on revenue. Of course, that's paired with an upbeat forecast and plans to cut about 1.5% of jobs. But beyond that, what sticks out to you?
You know, the number that I liked a lot along with that was increase the free cash flow guidance by $500 million to $10.5 billion. I think that is going to put some rest. A lot of people say that, you know, the company has been growing revenue, but free cash flow has been flat for a while. So I think that's going to be well. And I think that will give the company a little bit more flexibility to perhaps do an acquisition this year, something that they haven't done, I would say, in a few years now.
All right, Anurag, we're going to have to leave it there when it comes to IBM and head back to Tesla. We're going to go back to Tesla. We do that with Ross Gerber. He's the CEO of Gerber Kawasaki Wealth Management, certainly a longtime Tesla bull who has been critical in recent months of Elon Musk's attention and where it has been focused. Ross, always good to have you. You've had a couple minutes to check out these numbers. What stuck out to you?
Energy storage deployed up 152%.
Energy.
Margins were... Yeah, you know, this business is amazing. I mean, think about it for solar companies to be able to store energy and the megapack production and what the potential margins are of this business growing, you know, well over, you know, 3 digits now, so 150% growth. So that's exciting. And then margins weren't like really dramatically impacted, although most of the price cuts were sort of at the end of the quarter. So we'll have to listen to commentary. But these are good numbers across the board. I have no issue with them, and Tesla's executing.
What about what's to come? Is that really the interesting part of this story? Is it the current business? I mean, they're talking about the Cybertruck on track to begin production later on this year. They're working on a next generation vehicle platform that's under development. Is that just the shiny new thing still, or is that real?
Well, that's a real shiny new thing that's coming hopefully by the end of the year or sooner. But I think also if you look at the numbers, they're now saying that both Berlin and Austin are up to 250,000 cars. So that's 5,000 cars a week. So that's also a piece of news that they were at about 3,000 cars a week. So they've gotten up to production levels that are scalable now in both Berlin and Austin. And I think that is really exciting. So when you really look out over the next year or two for Tesla, they have an amazing ramp business. It's quite amazing.
Let's stick with the cars for just 1 second here, Ross. I am curious here about the pricing on them. We know, of course, they trim prices a little bit towards the end of the quarter in order to stoke demand here. Do you think that they'll continue down that road here in adjusting the cost to make it a little bit more favorable relative to competitors?
Yeah, I mean, they trimmed the price a lot of it, and I think that it really, stoked demand tremendously, and I think they're pretty soon, will reach selling out of their cars. But I think this is all about the IRA laws being so confusing and Tesla wanting all their cars to qualify for the EV tax credit, which makes the car incredibly affordable to most people, which was ultimately Elon's goal. So right now, I think that's the big, sort of boogeyman out there is as production scales and costs decrease per vehicle in Berlin and Austin, what margin compression are we seeing from, let's say, a 20% reduction in price versus the cost savings that they're getting in the factory? So there is some margin hit for sure. I just don't know how much.
All right, we got to run. Ross, thank you so much. Ross Gerber of Gerber Kawasaki there. Looking at shares of Tesla up about 0.75%. Guys, CSX is up 1.3%. Yep. IBM is up about 0.25%. Anything here that kind of changed sentiment in your view?
Well, I would keep a little bit closer eye on some of the other semiconductors because I thought the fact that on Semi fell on the back of those reports, Wolfspeed, which we don't talk a lot about much, which of course used to be Cree. So there is, I think, still some trouble in that semiconductor space. It'll be interesting to see what the reaction is when the cash markets open tomorrow. All
right, lot to digest certainly here in the aftermarket and certainly into the Thursday trade. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Quick Take. Beyond the Bell. We will see you again, same time, same place tomorrow.